CA Final SCMPE Chapter 2 Modern Business Environment. This class will be completely in English. So in this chapter I am going to cover all these 9 concepts. Okay, and you can see the use the PDF from Telegram channel given in below description link, or you can see it in about. So coming to introduction, what is modern business environment? The change from seller's market to buyer's market itself is the modern business environment. Means previously we used to have seller's market. Sellers have ability and right to decide the selling price. I told in last chapter, no, in traditional cost management, previously what they did, cost plus profit is called to selling price. Okay, at this price they'll be able to sell the product and earn required amount of profit they want to earn. So, but what happened now in modern business environment? It became buyer's market. Means buyers are dictating the price. Sellers are in a position to sell the product at market price, means at which the buyer is able to pay for the product. So this is due to lot of changes gone through from past years, and sellers do not have any option. They either sell at market price or they can sell lower to the market price, but it became the buyer's market, means they can get the product at the price they want. And this is the only in modern business environment. Customer satisfaction, means satisfying the customers itself became the very big challenge. So in the modern business environment, means in current environment, many concepts have evolved just to satisfy the customer, just like cost of quality, total quality management, business excellence model, and supply chain management. All these are just to satisfy the customers, give them the better quality at lower prices. So when coming to the first topic, cost of quality, it is nothing but sum of all the cost which are incurred relating to errors or any defects. Means it might be the prevention of defects, detection of defects, or correction of defects, anything related to defects. So all that some cost are get together called as cost of quality. Cost to bring the quality, cost to reduce the defects, no, so it will result in quality. So sum of all the cost will be cost of quality. All the cost in the sense, majorly there are two types of cost in a broad sense: cost of good quality, cost of poor quality. Mean cost of good quality is also called as cost of conformance or cost of control. Cost of poor quality is called as cost of non-conformance or cost of failure of control. Both are inversely proportional. Why? See, if you invest in a process to get a good quality, then defects will be reduced. No, then cost of a failure of quality. See, we have earned the quality, so cost of failure of quality will be obviously lower. Okay, so if we invest in good quality, we don't have poor quality. If we don't invest in poor quality, if we don't invest in good quality, we will have poor quality. So both are inversely proportional. Okay, next, when will be cost of good quality incurred and for what purpose? It is incurred before or during the production. Why? To bring the quality. Okay, cost of good quality is to bring the quality. Then what is for cost of poor quality? For, due to quality failure, it is incurred due to quality failure. It is to bring the quality. It is due to quality failure, and it is incurred after the production. These are before or during. This is after the production. So coming to cost of good quality, it is further divided into prevention cost and appraisal cost. Prevention cost in the sense any cost incurred during the production, before the production, and it is during the planning stage itself. Before incurring any expenditure, before going to the production stage only, in the planning we will take some decisions, we will incur some cost just to bring out the quality. It may be employee training or having a best infrastructure, anything. So following are the examples. We have to read this example because it might be asked in few of the questions to bifurcate the quality. Just one key point is quality. If you see any quality, it means it will be prevention cost. If you see any review, it will be also prevention cost. So once go through that education of supplier, testing of new materials, preventive equipment maintenance, supplier evaluation and selection, all these will be incurred before the production only. So that cost is called as prevention cost. And next, appraisal cost. And in appraisal cost, it is incurred during the production. Okay, this is before the production, this is during the production. Why we are incurring this? To check whether the quality standards are met or not. Okay, measuring and monitoring the quality activities. To measure and monitor the quality activities, we will incur the appraisal cost, like checking the materials, inspecting the materials, all that. Field testing and inspection will be covered. All types of testings and inspection will be appraisal cost. So examples: inspecting materials, field testing materials, packing inspection, product acceptance, inspect and testing the equipment, outside certification. Any of this will be covered under appraisal costing. You have to remember all this, or just you should be able to understand the logic how they are bifurcating. Okay, anything that is incurred before planning will be under prevention cost. Anything that is after, during the production, it will be under appraisal cost. And cost of poor quality is further divided into internal failure cost and external failure cost. Internal failure cost is to remove the defects that are found after the production but before they are delivered to the customer. Okay, before delivering to the customer, the company itself will work on that and try to rectify the defect, because if it is go to the if it will go to the customer, it will be a bad impression from customer point of view. So to avoid that, we incur internal failure cost. So internal failure might be the scrap also. Remember this, because there is a fail in internal controls, we will have more scrap. So this will come under internal failure cost. And anything we are doing the work again, it is not the first time, we are doing it again and again, rework, redesigning, retesting, anything will be the internal failure cost. Downtime will also be due to lack of proper internal controls, we will incur that one. So it is an internal failure cost. Next, external failure cost. This external failure cost will be incurred to solve the defects discovered by the customer. See, this is before delivery to the customer, this is after delivery to the customer. Customer will find the defects and we need to solve that one. Examples: cost of recalls, lost sales, returns and allowance, warranties, repaid, product liability, customer dissatisfaction, lost customer share, lost market share. This is also comes under external failure cost and customer support. So what we have studied, there is a new technical cost of quality. It is a sum of cost of good quality and cost of bad quality. It is a sum of all the costs which is incurred for prevention, reduction and correction of defects, and it is further bifurcated into in cost of good quality and cost of bad quality. Cost of good quality is further bifurcated into prevention cost and appraisal cost. Cost of bad quality is bifurcated into uh, internal failure cost and external failure cost. Internal cost of prevention cost first. Prevention is incurred before production during the planning stage to bring the quality. And next, appraisal cost. Appraisal cost is incurred during the production to check, to monitor whether the quality activities have been met or not. And next, internal failure cost. It is cost incurred to rectify the defects before delivery to the customer after production. It means company itself will find the defect and try to rectify it. And when coming to the external failure cost, it is incurred after customer giving complaint on the product. Okay, so first illustration. Livewell Limited is a manufacturing company that produces a wide range of customer products for home consumption. Among the popular products are its energy efficient and environment friendly LED lamps. The company has a quality control department that monitors the quality of products. As per the recent cost of poor quality report, current rejection rate for LED lamps is 5% of units of input. Okay, 5% are getting rejected, means 5000 into 5% equal to 250. Next, 5000 units of input goes to the process every day. So that's why we took that 5000 units as input, and among that 5000 will be 5% will be the rejection rate. So total goods rejected will be 250. Next, quality control department has proposed few changes to the inspection process that would enable early detection of defects. So they want to propose a new scheme, it seems, to detect the defects at an early stage. This would reduce the overall rejection rate from 5% to 3% of units of input, and the improved inspection process would cost the company 15,000 each day. Okay, if we incur 15,000 each day, 3% will be the rejection rate. Okay, so we need to find the quality, so cost under both the schemes, analyze the proposal and suggest if it would be beneficial for the company to implement it. Okay, so we need to find whether the new scheme is beneficial or not. See, once cost incurred in old scheme, 250 units will be rejected and 200 lost to the company for each unit. Each unit that is rejected results in 200 lost to the company. So 250 goods rejected, no? So 250 into 200 loss per defect. Then it will be 50,000. This is the cost incurred in current scenario. But when we propose new scenario, what will be the cost? One is rejected one, means 5000 into 3% means 150. 150 goods will be rejected, and in that 200 per good loss. 150 into 200, 30,000. Okay, this is the loss. But not only this, the rejection rate will decrease to 3% only if they improve the inspection cost process. That would cost 15,000 each day. Means 30 plus 15,000 will be a total cost. Means total 45,000. They are asking whether it is beneficial or not. See, in the current scenario, it is 50,000, and in the proposed scenario, it is 45,000. Means there is a benefit of 5,000. Okay, so it is beneficial. After implementation, analyze the maximum rejection rate beyond which the proposal ceases to be beneficial. See, now it is beneficial if rejection rate has decreased to 3%. But they are asking what is the maximum rejection rate we can accept. Okay, we can we can say okay for implementing the new product. So we need to find the maximum rejection rate. So how they calculated till now? Current it is 50,000. Beyond 50,000, anyway we are not going to uh, spend on quality improvement. So maximum 50,000. How we should come that this is a maximum amount? How it should come? 15,000 first for improved inspection process, and daily we will incur 200 per unit. So you don't know units. Okay, this will be the cost. This cannot be more than 50,000. So we are equating to, so if it is 50,000, what will be the maximum rejection rate we can know. So 50,000 minus 15,000 equal to 200x. It is 35,000 equal to 200x. X equal to 35,000 divided by 200. Then 175. So 175 divided by, see, we need to find the percentage. So maximum goods that can be rejected will be 175. But what is the percentage? 175 divided by total number of units, 5,000 into 100. Okay, 3.5%. We can accept the goods only if it is maximum up to 3.5%. We can accept the process, improved process. Otherwise, we should not. If the rejection rate is more than 3.5%, it is not economical to improve the process by incurring 15,000. So it is done here. Optimal cost of quality. What is meant by optimal cost of quality? It is the cost at which both cost of good quality and cost of poor quality is minimum. Okay, so at what price it will be minimum, we should find in the see the below example to understand the case clearly. Suppose we are in current case 1. Okay, in case 1, we are not incurring any cost for prevention or detection. We are just incurring internal failure cost and external failure cost. The total cost is 2,50,000. Okay, so what we thought it is 2,50,000, we need to reduce that. We are getting many sales returns. We are getting so much of scrap. So we want to reduce that. We will incur something on prevention and detection cost for the same. So we have proposed two methods, case 1, case 3. In case 2, we have proposed to 80,000 of rupees of prevention cost, 60,000 for detection cost. Okay, what it gave the result? Internal failure cost reduced to 20,000, external failure cost reduced to 20,000. Okay, it is 1,80,000 total cost. But what we thought, if we invest 80,000 and 60,000 here, it is reduced by 1,10,000. But what if we invest more on prevention and defective cost? It will be reduced more no. So in that sense we thought, and we again invested in prevention cost and detection cost. Then it resulted in internal failure cost of 10,000, external failure cost of 10,000. See, it decreases from 20,000 to 10,000. It is also beneficial, but when we calculate the total cost, it is 2 lakhs. Means it is more than case 2. Okay, even if the defects loss is very less, lo- in internal failure cost, it is economical to follow case 2, because we need to find in the financial perspective first. Otherwise, if we are following non-financial perspective, we can go to case 3, because we don't want sales returns. We don't want any sales to be rejected. So, if we are not thinking from economic point of view, we can invest in that. So, case scenario. JK Limited produces and sells a single product. Presently, the company is having its quality cost control system in a small way at an annual external failure and internal failure cost of 4 lakh 40,000 and 8 lakh 50,000. So, what is the external failure cost now? 4 lakh 40,000. Internal 8 lakh 50,000. Okay, no, now as a company is not able to ensure supply of good quality products up to the expectations of the customers and wants to manage competition to retain market share considers an alternative equity control system. So they want to follow another control system to gain the market share, to retain the market share. It is expected that implementation of the system annually will lead to prevention cost of 5,60,000 and appraisal cost of 70,000. External and internal failure cost will reduce by 1 lakh and 4 lakh 10,000. So here they have given 4 costs: prevention, appraisal, external, internal, external. So what we have invested in prevention cost 5,60,000, appraisal cost 70,000, internal failure cost, it is, see, prevention cost of 5,60,000 it is here, but when it comes to the external and internal failure cost, what it is showing, external and internal failure cost will reduce by 1 lakh and 4 lakh 10,000 respectively in each system. So it will reduce by 1 lakh rupees. Means how much it is now? External earlier is 4 lakh 40,000. Now it will be 3.4 lakhs. Sorry, it is external failure cost now 3.4 lakhs. When coming to internal failure cost, it is reduced by 4 lakh 10,000. From where it reduced to 4 lakh 10,000? From 8 lakh 50,000 it reduced to 4 lakh 10,000. It is 4 lakh 40,000. All other activities and costs will remain unchanged. Examine the new quality control proposal and recommend the acceptance of otherwise of the proposal, both from financial and non-financial perspective. We need to analyze both the scenarios. So, what will be the total cost here? 4 lakh 40,000 plus 8 lakh 50,000. It is the initial cost. Previously, we need to incur 12 lakh 90,000. But coming to the current position, 5 lakh 60,000 plus 70,000 plus 4 lakh 40,000 plus 3 lakh 40,000. 14 lakh 10,000. This is only cheap, no? Earlier only it is cheap. And we should know, in financial perspective, it is not that beneficial. So, what happens in non-financial perspective, you can accept, because customer satisfaction is also necessary. at one point of time or other point of time you can reach the quality standards. So non-financial perspective will try to will suggest you to not follow the implement the new process. Okay, what is your advice to the company if the company wants to achieve zero defect through a continuous quality improvement program? So if the company want to achieve zero defect product, then it need to eliminate the waste continuously. Then only it can achieve the zero defect product. The zero defect. Suggest a suitable quality control level at a minimum cost. So what is the level? What is the minimum cost? What is the control level? We know minimum. What is the minimum cost? Optimal cost of cost of quality. So here both good and bad quality costs are minimum. Okay, so at this point you can adopt the control level. Coming to the next topic, total quality management. Total quality management is the second technique we are discussing in modern business environment. It aims to increase the quality. Don't confuse between Six Sigma and total quality management, because total quality management will increase the quality. Aim is to increase the quality. In Six Sigma, our aim is to zero defects, reduce the defects. Okay, it is clear, don't confuse between them, because everything in the SCMP itself is to increase the quality and reduce the defects with lowest price possible. So don't get confused between the each and every concept, because every concept is originated with an idea, with its unique skill, unique theme. So remember that unique theme. So TQM is to increase the quality that will meet the customer satisfaction. So what should it do to increase the quality? It should continuously improve its internal process. Wherever defects are there, it need to adopt a new process and improve that. So TQM is to ensure that things are done right the first time, because you don't want to rework on it again. We don't want defects from that. We don't want waste from that. We don't want scrap from that. So in order to eliminate and all this and get the best product the first time when we do the work, we adopt total quality management. So for successful implementation of total quality management, we need 6 C's. Okay, all these are 6 C's. 6 means some not any specific formula, but just to successful implementation we have adopted some policies. What are those? Commitment should be from top management to the lower level. Culture, continuous improvement. I think you are familiar with all these words, so I'm not explaining in detail for everything. Cooperation, customer focus and control, all these 6 C's, if we follow them, they will help us for successful implementation of TQM. Person named Deming gave 14 points to improve the process, okay, for achieving the quality. In total quality management, to achieve the quality, Demings has given 14 points. What are those 14 points? I have shuffled from the board book just to segregate into separate segments. See, first 2 segments are regarding the policy. First one is we should adopt the new policy and we should create constancy. See, it should be where we should create a long term target. And see, first wordings are given by given in ICAI material, but here I kept hyphen for some words which are not familiar to us, which we cannot understand by seeing that. Okay, see, we have to create a constancy for purpose towards environment, means we should have a long term target, and we should move towards a single supplier. Why should we move to the single supplier? To avoid the defects, we should select a supplier who will give the best quality product at the rate reasonable. And if we adopt multiple suppliers, what will we will get inputs of different qualities, and output will be differed from each other. Okay, in order to change that, we have to select a single supplier, but care should be taken the supplier is very reliable and trustworthy, because we are depending on them for the entire input. If he is not responded properly when we want, it is just a waste to adopt all these policies. So care should be taken that he is a reliable person. And C's dependence on inspection. These 2 points are for suppliers. We should inspect before coming to the production line only, before ordering we should inspect supplier instead, so that inspection time will be reduced and cost will be reduced after coming to the production floor, after we have received an order. Okay, so we should not depend on inspection, rather we should select a supplier who provide a quality project. And the next depends on next are between the employee related points. We should give proper training on the job, and if they want training, we should encourage them, and we should motivate them, and we should encourage the leadership skills, and we should drive out any fear they are having, and we should break down the barriers between the departments, because they should, if they are fighting, how will be the company perform best? So we should not have any barriers between the departments. Eliminate the slogans, means we should not pressure the workers. Eliminate the management by objectives, means we should not see them based on their targets, how they based on the results. See, if we ourselves are seeing the targets, what will they do? They will obviously try to reach the targets, and while reaching the targets they will neglect the quality. Okay, if we ask them to see a complete video in 1 hour, it is a 1 hour video, they will complete in 1 hour, but they could not understand that. No, they need to understand that, they need to write that. Okay, it is just waste of 1 hour listening to the video without understanding that. So in the same way, if they reach the targets without giving any quality, it is just a waste of resources. So we should not encourage them, and we should to reach the targets, increasing not caring about the quality. We should eliminate the management by objectives. Remove the workman barriers, means we should not keep heavy restrictions like not to use the phone, all that, not to talk in the company hours. Okay, not to go to break and all that. Transformation is these two are related to constant improvement. Transformation is everyone's job, everyone should participate in it, everyone should convert their job opportunities and improve constantly and forever. PDCA cycle, it is for continuous improvement. We should plan, we should implement that, we should check whether it is correct or not, and we should take the corrective actions in act stage. Okay, we have studied 3 things in TQM. What are the 3 things? 6C and Deming's 14 points, PDCA cycle. This is for continuous improvement, and this is for successful implementation of TQM. This is to earn the quality in the product. Next model is business excellence model. What is business? What is the mean by excellence? First, excellence is nothing but giving the best. Okay, when can we give the best? Only if we adopt the best principles and strategies. So what we should do, if we keep on researching on every strategy and we fail, again we research, we find the best way, we adopt it, it is a big process. So what they should do, all the industries, all the companies in the industry should have a conference, discuss what is best in the company and share their ideas. This will reduce the resources, time and cost. And if they share the ideas and implement in their own companies, there, if I adopt all these inputs in my company, it is I can reach the success very early at low inputs, low resources. Okay, so business excellence is model is nothing but research and study competitive strategies, policies and prepare best quality management principles and make our company systems process strong. So in there are many business excellence models, among that we discuss only two in the uh, current chapter. First one is European Foundation for Quality Management Excellence model. In AFQM model, it helps to increase the competitiveness. Okay, how, what is meant by competitiveness? How it will be increased? By giving the primary importance to customer needs. Competitiveness means having importance over the competitors. How can customer have having, how can customer see you in the first than your competitor? If you value the customer, if you give him whatever he needs, and long term stakeholder centric view. Being customers are not only your stakeholders, there are many other dependents on your company. You should take all the stakeholders into the consideration. According to EFQM model, we have three stages to assess the organization. One is direction, second is execution, and third one is the results. Direction in the sense, why does the company exist, means mission, we should check the mission and tell why does a company exist, and what is its vision, what for what purpose it is in the industry. And the last one is objectives, what is the strategy it uses to operate the organization. Okay, we should look into all these to assess a company. First stage. And in module 2 we should how we check how it is achieving its target, in what way, because I have told many times achieving the target is not only the criteria, how we achieved it does also matters. So we should check how deliver on, how does it deliver its purpose and strategy. Okay, how it is executing its strategies, we should check. And results, results obviously will speak what you have done. So we should check what it has achieved and what it want to achieve in future. All these are for business excellence model. Okay, in business excellence model we have two methods. EFQM model, first one is, in that EFQM, what we will do, we will take it into the consideration of, sorry, we should increase the competitiveness by assessing the organization in three modules. These are the three steps. Results should be measured by radar. See, generally radar is used to check who are the persons, who are the stakeholders not satisfied with the existing process. So what is the radar full form? Results, approach, deploy, assess and refine. We should check all these results and how they achieved it, how they used their assets, how they are assessing, and how they are refining, means trying to improve the process. These are used to check, measure the results. Next, second one, I said one is EFQM model, no, the other is Baldrige criteria for performance excellence. In this, we should assess our business. In previously, we should assess some other's business and implement those policies in our business. But here, we should assess the business, innovate and improve. We should check our business ourselves only, and we need to innovate new content, and we need to improve that to achieve the performance excellence. It is built around 7 categories. Okay, how it is built means, it in all these areas we can innovate and improve. There is a scope to innovate and improve all these 7 areas in results, operations, workforce, measurement, customers, strategy and leadership. So we should implement all those strategies in the 7 areas. Next, we have done with business excellence model. Next one is theory of constraint. Constraint in the sense obligation. Okay, means to do our work, something is obstructing us. Constraint in the sense something, obligation or obstruction, we have to do our work. So what will be the obstruction in the business? Bottleneck products means some machines, see, we need to produce a product. Product name is A. For this product, we need 2 machines X and Y. Machine, we need 500 units of product A. So X can produce 500 units in 1 hour, but Y can produce only 300 in 1 hour. Means it is obstructing us not to do our work properly. This is the bottleneck product. Okay, in this bottleneck, what we should do if we have this bottleneck resource? It will be the theory of constraint. Okay, theory of theory of constraint in the sense, what we should do if we have something obstructing our process. We should what does it say? We should utilize this bottleneck resource 100%. Maximum utilization should be done, and we should use this accordingly, because if we use this to 100%, we can produce 500 units, but it also needs machine Y. So if it can produce only 300 units, 200 units will be work in progress. For this, we need to incur the inventory, storage cost, carrying cost, all that stuff again. So in order to eliminate all that, what does theory of constraint say? Utilize the bottleneck resource fully, while non-bottleneck resources should be should not be utilized to 100%, since it will result in increasing the inventory. So I have given an example, same just like this. You can refer to that. No, I'll only tell. A product should go through machine X and machine Y for final output. Okay, machine X capacity is 1300 kgs per hour. Machine Y is 1100 kgs per hour. So this is the bottleneck. So produce only 110 kgs per hour, because machine Y is bottleneck resource and we should utilize it 100%. Okay. Next, throughput accounting means when we have bottleneck resource, how we should allocate that, what we should do with that bottleneck resource, what product we need to produce with that bottleneck resource. See, this is generally done when we have a bottleneck product like machine X, and we need to give that to A, B, C. All the 3 products require machine X. What we should do now? We should calculate contribution, because we should give the bottleneck resource to the product which gives higher contribution. So how will the contribution arrive? Selling price minus variable cost. Selling price minus variable cost. Selling price minus variable cost. All that we should do, and we will arrive at throughput bottleneck we will arrive at contribution. And what is the variable cost here? It is the material cost, because the throughput accounting will treat labor cost as a fixed cost, because if labor can, whether they have contributed to product or not, whether they have produced any product or not, we should pay for them. So it is some kind of fixed cost. So throughput accounting will consider only material cost. So what we should do now, we should calculate the contribution, some x. After calculating the contribution, we should calculate bottleneck resource contribution. Means contribution per bottleneck resource. How we should calculate this? By dividing the total contribution divided by bottleneck resource per unit. Means for total contribution we have already found out, throughput contribution. How to calculate the bottleneck resource per unit? How we should, it is already given in question. What is that? See, machine X is required to produce machine A, B and C. For A, we need 1.5 units of 1.5 hours of X. For B, we need 2 hours. For C, we need only 1 hour. Okay, this is the bottleneck resource per unit. Means bottleneck resource is here machine. Machine per unit of A. How machine hours per unit of A, exactly. Okay, and next, after dividing with this, we will get throughput contribution per bottleneck resource, and we will arrive at some amounts. We should give the highest ranking to the highest contribution. Say it might be B, C, D, third one. Okay, so we should use the machine X and produce Y first, and after fulfilling all the Y products of Y, we should use for machine X, and next we should use for, if anything remain, we should use to produce A. Okay, based on the throughput contribution per bottleneck resource. Next, throughput accounting ratio. See, throughput accounting ratio is used to check whether the product is profitable or not, because in the above, to calculate the contribution, we have only material cost. We consider only material cost, but there will be other cost, like some other variable cost, some other fixed cost, all are there. So after considering all this, whether the product is profitable or not, we will check in throughput accounting ratio. We will check through this. If throughput accounting ratio is more than 1, then the product is profitable. Means after considering all this cost also, it is making profits. So if it is less than or equal to 1, it is not that profitable. How we will calculate throughput accounting ratio? Throughput contribution, above we have calculated no contribution per bottleneck, throughput contribution per bottleneck divided by factory cost per bottleneck. What is meant by factory cost? Anything, any cost other than the direct material cost. How we will calculate factory cost per bottleneck resource? Factory cost by bottleneck resource. That's it. Okay, once again I will revise this. We should calculate throughput accounting ratio to check whether the product is profitable or not. Product is profitable if the throughput accounting ratio is more than 1. So how to calculate the throughput accounting ratio? Total contribution we have considered above, no, total throughput contribution per bottleneck resource divided by factory cost per bottleneck resource. Factory cost per bottleneck resource means total factory cost by total bottleneck resource. Total factory cost in the sense, factory cost includes everything, every cost other than the material. Next, it is related to illustration to throughput accounting. This is a question regarding throughput accounting. So we should company adopted throughput accounting and products are ranked according to product return per minute. Select the highest ranked product. Okay. So I said, we should calculate contribution per bottleneck. It is why we have to calculate this to find which is giving highest contribution, so that we can produce that product first in priority. So he is also asking for the same highest rank product. What we should calculate? Contribution per bottleneck. First we will find the contribution, selling price minus material and other variable cost. See, if he gives separately material cost and other variable cost, we consider only material cost, but he combine with that, so we have to take completely of this amount. Then what will be the contribution? 66 minus 24, 42, 75 minus 30, 45, 90 minus 40, 50. Okay. Now we have to find out bottleneck contribution per bottleneck. Per bottleneck resource means how much time each product is taking to for the bottleneck resource. Product X requires 15 minutes of bottleneck resource. So 42 divided by 15 for product Y 15, product Z 20. Okay. So 42 divided by 15, 2.8, 45 divided by 15, 3, and 50 by 20, 2.5. This is the contribution. And highest, what is the highest rank? Product Y, 1, 2 and 3. Okay. Next, calculate the throughput accounting ratio and comment on it. So throughput accounting ratio, what I said, if TAR, throughput accounting ratio, is more than 1, we have to produce, it is profitable to produce that product, otherwise it is not profitable. So how to, what is the formula for that? Contribution per bottleneck divided by factory cost per bottleneck. Okay, first we need to find this. First, factory cost per bottleneck we need to find first. See, factory cost is 2,21,600 and bottleneck resource is 75,120. What is the factory cost per bottleneck? 2,21,600 divided by 71,120, 2.95. We should divide this with contribution. Okay, 2.95, 2.95, 2.95. 2.8 divided by 2.95 equal to 0.95. 3 divided by 2.95 equal to 1.02. 2.5 divided by 2.95 equal to 0.85. Only this is more than 1. So this is a profitable thing to do. This is a profitable product to produce. Okay, next. Supply chain management. Previously we have studied value chain management. What is value chain analysis? What is that? We will analyze all the products. We will bifurcate into primary and secondary, and we will find what are the value added among them. We will find what are the non-value added. We will focus on value added and we will eliminate the non-value added activities. It is value chain from raw material to finished good. But supply chain management is managing all the activities from transformation to end product. Okay, it is a managing the activities. Okay, types. How many types are there? Push and pull. Push means they will come, normally push means pressing from our side. Okay, means we will produce on estimated demand. We don't know the actual demand. We will only estimate some demand and we will only produce that. When coming to the pull model, it is request from their side. When the actual demand comes, then only we will produce that product. And we will have upstream flow and downstream flow. What is meant by upstream flow? When the flow is related to supplier, our supplier means we will purchase some raw material from a supplier. No, it is above us, so that is called upstream flow. And when the flow is related to customer, then it is called as downstream flow. And when, so we will discuss in detail regarding this upstream supply chain and downstream supplier chain. So coming to upstream supplier chain, we will manage as transactions with supplier by having relationship with suppliers and use of information technology. So what is, how relation with supplier help? Supplier should be innovative. We should select the suppliers who are innovative, qualitative, reliable, and gives a low price and low risk factor. Then only both business will achieve the value, which is difficult to achieve it alone. See, supplier should be reliable and trustworthy, produce the quality products, and from our side also we should also trust him. Then only our both, we should also pay them, and we should also support them, we should also trust them. Then only we both, our both business will grow. Other than that, if supplier is not listening to us, how can he have customers? And if company itself is not having suppliers, how, from where can they get the raw materials? So they cannot perform individually well. They only perform when as a group, when they coordinate with each other. So we, to have influence on upward stream, to have influence on suppliers, we should have some strategies. What are those? Sources and number of suppliers, cost, quality, speed of delivery, make or buy or outsourcing. Okay, so source means we should find the best supplier from the market, and with we should find such suppliers with whom we have bargaining power. Okay, and number of suppliers means we should select how many suppliers we want. It is economic, it is good if we have one supplier, because we can order in bulk and we get discounts, and we get qualitative products, and our inputs quality will be same. Okay, so that our output will be also same. Okay, if we, but care should be taken that that supplier is reliable, and we should take the care regarding the cost, quality, and speed of delivery, and make by outsourcing. So we should decide which product should be outsourced, what input can be outsourced, or that. And use of information technology. So relation with suppliers is one extent, but use of information technology is next level in nowadays. Especially we should use IT in procurement and logistics. This is called e-procurement process, and this involves e-sourcing, e-purchasing, and e-payment. What does e-sourcing mean? Using IT to select the supplier, which reduces the time, cost, and effort. E-purchasing means using IT in product selection, ordering, which reduces the time and cost. E-payment, using IT in invoicing, fund transfer for fast payment and less error. Okay, I think you are familiar with this word, so I am not discussing in detail. And downward stream, this is the relation between the with the customer and the organization. So we need to manage that. How can we manage that? With marketing, means, so every time you can maintain a relationship with the customer, and you can go to new customer through marketing only. So how can you keep an relation with existing customer? By through emails, regularly sending them. See, nowadays no one is asking whether we had lunch or dinner, but Swiggy is asking us every time. So in that way, it is in touch with its existing customers. And when you open some YouTube and you are watching some videos, uh, in the middle you will get some advertisement, and sometimes you cannot skip that. It is where you can attract the new customers. And in many other ways, I'm telling one example. So marketing is the main thing. And CRM, customer relationship marketing, means you should know your customer, and you should give what he is expecting from you. You should analyze what customer is buying, what sales are going high, which product is highly sold, which flavor is highly sold, and which is a customer account profitability, means what is the source of profits. We are getting profits, but why customer is attracted to that, we should know. And we should calculate the customer's lifetime value, because sometimes we receive an income now only, or we will have some expenditure now only, but uh, benefit or expenses will have in next few years. Okay, then we should calculate the present value of net profit from the customers. We have an example with this, for this. And next, customer selection, acquisition, retention, extension. We should focus on all these elements, because we can have different types of customers. Because so sometimes we will have teenagers as our customers, sometimes old people might be our customers when we are making that's walking sticks, or something which they only use, or very small pencils, rubbers, all that. Only small kids are attracted to that. Toys, small kids are attracted to that. So we should select our customer to whom to sell that, and we should try to attract them. Next, use of information technology. How we should link the sales system to purchase system, means immediately, uh, see, now we are in a position to produce on demand. So whenever the sale order comes, it should using IT should send a notification to purchasing system that it needs certain quantity of finished goods at a particular time. So it should be automated process. It like every person cannot sit and watch every time whatever whether sales are coming, and he need to call every time purchasing department for certain amount of input. It is not practically possible. So use information technology to link sales with our purchases. And we should sell the products online. We can sell using information technology, and monitor the online customer transactions. And we should keep in touch with customers through email. Take a quick action for if they have any queries. Take a quick action, and it should be uh, low cost and time. Okay, next, brand. It is one of the important thing, because if Apple sells anything, we don't worry about quality, or whether it is highly priced or low price, because we have that Apple will sell a quality project in our minds. So creating brand helps us to reach the customers easily. So it is beneficial if a company, any organization, creates its own brand and go into the customers. Okay, in this way we can keep in touch with our low downstream. Service level agreements, it is in supply chain management only. This is a part of supply chain management, where the original contract is edited or changed between the customer and service provider for providing the service. So I said there is an example, no, for what it is, present value of customer lifetime. So coming to the question, Cineworld is a movie theater, is located in a town with many colleges and universities around it. So they have many colleges and universities in the Cineworld. The town has substantial student population, most of whom are avid movie goers. So most of there are many students in that area, and they will go to movies regularly. Business for Cineworld has been showing slow in the recent years due to evident of streaming websites that show latest and popular movies online. Okay, because of all these new websites, apps, the Cineworld is facing some losses. Not only losses, but it is going very slow. However, management of Cineworld continue to feel students would still enjoy watching movies on big screen. Also with the facilities and ambience that only a movie theater can offer. Accordingly, they have framed a plan to attract students by offering the discounts. See what they observed, some people will like watching movies in theaters only. For them, we should encourage that, and we should offer the discounts to them to attract such students. Okay, so they want to adopt a new policy. What is that? Average time the student spends at college or in university is 4 years. Okay, which is the average duration of any course. For the nominal one-time subscription fee, Cineworld plans to offer students discounts on movies ticket for a period of 4 years. Okay, if they pay subscription fees, then they will give discount to the movie tickets in the next 4 years. They are giving this opportunity to the students by attracting more footfalls. Cineworld targets to cross sell in food and beverages and sovereigns. This would help to sustain a reasonable revenue each year. So what they want to do, they will also side by side want to sell the food and some accessories in the theater itself, so that every student comes there will try to give some revenue from that. Cineworld attract attention to the plan by initially offering free tickets, food and beverage and gift vouchers. This one-time initial expense net of one-time subscription fee allowed would cost 5,000 per student. Okay, so initial expense is 5,000 from the student. So we are getting the subscription fee of 5,000 from every student. On subscription to the plan, the viewership and purchases of each student is expected as follows. Okay, and now we have to learn the present value. See, this is one time initial expense. Net of one time subscription fee collected would cost 5,000 per student. Means this is the expense for the theater itself, Cineworld. Okay, so what is the net expense now? 5,000. And now, see, we will write this afterwards. First, we will write the revenue. They have given some notes here. Only 50% of subscribers were expected to visit in the theaters in year 3 and 4. Okay. So whatever the amount came in first year, just 50% of that will come in third and fourth years. Across all the years, only 75% of subscribers would visit the theater are expected to buy food and beverage. Means every person comes to a theater will not purchase the food items there. So only 75% of among the people who come to theater will purchase the food, and only 25% of subscribers who visit are expected to buy sovereigns in the year 1 and 2, and 10% of them in the year 3 and 4. So whoever comes to the Cineworld will not buy purchase the sovereigns. No, only 25% will be purchasing in 1 and 2, and 10% in 3 and 4. Okay, we should write. This is related to sovereigns. This is related to food. First we have to consider only this point. That too in 3 and 4. So movie tickets for 1, 2. What is the amount collected? 2,000. and here 3000. And in this, sorry, 1500, no, we have to do present value of this because it is to be collected in 1 and 2 years. So what is the present value of that? Present value factor annuity of 1 and 2 years is at 10% is 1.735. So what is the amount? 2000 into 1.735, 3470. Here see, total from 1 to 4 it is 3.169, means 3.169 minus, for 1 and 2 if we deduct we will get 3 and 4. 3.169 minus 1.735 will be 1.434. So 1.434. 1500 into 1.434. 2151. But what they said, only 50% of subscribers are expected to visit the theatres in third and fourth. So let it be 100%. In that 100%, only 50% will visit in third and fourth year. Okay, so 100% of 100% is 3470, and in the in the year 3 and 4, 2151 into 50%, only this much amount we are going to receive it. Okay, next, food. We have something to consider in food. Only 75% of subscribers who visit the theater are expected to buy. So only this is very first thing you have to understand very carefully. The other things I will tell, but this 50% of subscribers is more important than any other thing. So if they come in first and second year, how much will be the cost? 4000, and third and fourth 3000. 1.735, 1.434. I said no, calculate the customer lifetime value per subscriber for the above plan. So we have to calculate in the customer lifetime value. I have written the formula above only, the present value. 4000 into 1.735, 6940. In that only 75% will be subscribers. See, on what 75% we should calculate? On 100%, means in first and second year we have 100%, no, in that 75%. So we have to multiply these two. 6940 into 75%, 5205. And next 3000 into 1.434, 4302. In that 75% in the second year means we have only 50% in the second year on that 75%. Or else, see, this is the one method, 37.5%. So multiplying 4302 into 37.5%, 1613. See, you can consider food point or you can consider first point here, because if you consider first point here, 75 it will in third and fourth year it will be half of first and second year. So 75% into 50%, 37.5%. Otherwise you have to consider only second point, and we have to for second and third point we have to calculate the purchases for the persons attended in first and in the first case. For tickets case is there, no, we have to calculate this 75% here and 75% here, and 25% of subscribers is there, no, we have to calculate the 25% subscribers on first year on 100% and in second year on 50%. Okay, it is the better way. Next, food and sovereigns. In first and second year, how much? 2250, and third and fourth year 750, 1.735, 1.434. So 2250 into 1.735 will 3904. In that 25%, in what 25? See here they have given question 25% of persons who visited the are expected to buy the sovereigns. How many persons were visited in the first and second year? 100%. In that 25% means 25% of 100 is 25% only. So 3904 into 25% will be 976. Next, 750 into 1.434 will be 1076. In this is 10% of them in third and fourth year. See, we have only 50% members in third and fourth year. Okay, from here. In the 10% will purchase the sovereigns, means 5%. What is 1076 into 5%? 54. So, if we sum of all these, we will get 3470 plus 7076 plus 5205 plus 1613 plus 976 plus 54. 12,394. So what is the amount of expenditure for in the initial expenditure? 5,000. If we reduce that 5,000, how much we will get? 7,394. This is the customer life value, net revenue from the above scheme. With this, so it is beneficial, no? They can follow. Next, benefits of supply chain management. Just have a glance. Just benefits of supply chain will reduce the inventory, because in when we have the sales, when we have the demand, automatic message will be sent to whenever the demand comes through IT. There is a link between supply department, sales department and purchase department. Selling department will send a automated message to purchase department and the production starts. So inventory will be reduced in the pull mode. Personnel reduction, productivity improvement, order management improvement, financial cycle improvement, information visibility, new improvement process, customer responsiveness, standardization, flexibility, globalization of. This is not much important, but have a glance if at all you want to. Gain sharing arrangement. See, this is an agreement between the supplier and customer. What? It will not get any payment whenever it sells the goods, but only receives the benefit for the benefit arrived to the customer when he actually uses the product supplied by supplier. Okay, it is a risky stunt, but if at all it works out, it will be good. See, just like a partnership firm, just like a employee, you want to be an employee or be a partner or proprietor, because proprietor will enjoy the profits, but it is very risky whether you receive it or not. If at all you are employee, you can have a safe secured amount. So this is a gain sharing arrangement is another method where people will earn profits rather than sale amount. So, but the only condition is there will be some prerequisites for that also, but agreement should clearly mention the amount of percentage of share to be shared by the supplier, otherwise it will lead to some consequences. So case scenario, I will tell you this after completion of outsourcing. Outsourcing it. So what is meant by outsourcing? Giving to any other company some input which we need. Okay, it is generally shifting the task that we want to do so that we can reduce the cost and efficiency, and we can increase the efficiency. And it is not only for manufacturing department but also for service, because you can give the transportation. If you are maintaining, if you are maintaining a store and you want to supply home delivery, you collect the orders, you pack them, but you ask some other person to take care of the deliveries. Okay, so it can be for a service department. You are selling the computers, but maintenance of the computers might be given to other department, other company. So for it is not only for manufacturing department, it can also be for service also. Next, what are the advantages? It helps to reduce the cost. We adopt to proceed to outsource only if it is a budget saving thing. See, because if we produce, it will cost 10 rupees, and if in the market it is available only at 8 rupees, then only we will proceed for outsourcing. So it helps to reduce the cost. And investment in technology, infrastructure and people. So we can get we can share the in technology of other people, and we can be in a relation, we can communicate with them with the updates, and we can have a better infrastructure, gives a business flexibility. And next, disadvantages. What will be the disadvantage? So we can have the risk of losing the data. See, if we tell them to deliver everything, they'll find some customers who are regularly purchasing, and they will open a new market, supermarket, and they will start selling the product. So there might be a loss of data or confidentiality. And operations and deliverables beyond our control, because if we give something, if we want any input from we have outsourced any input of our product, and it will be in their hands to produce, to give the inputs on time. Okay, if it is not deliverable, it is out of our control, we can't do anything for that. And if we pack goods and tell the delivery boy to deliver, but he did not deliver, it is also not hands, no. So there is a loss of control because of this outsourcing, and quality problems may arise. This is a case scenario for gain sharing arrangements. In this, Raya Healthcare Limited is leading healthcare service provider in Mumbai. It has approximately 450 potential beds. It provides a diagnostic and daycare specialty facilities also. It provides centers that they are using traditional devices for CT scan and MRI, which are not enough as per demand. Patients waited more than weeks for CT and MRI scans. This problem can cause delay in diagnosing illness, waste of time and other resources, not just in radiology but also throughout the healthcare center. Okay, what they are telling here? They have some diagnostic center, but patients need to wait for that for longer hours for CT scan and MRI scan. It is taking more than a week, more than weeks. So what will be the problem? They can become more ill, no, and there's a lot of time and resources, because till the report come we need to sit idle, and uh, it will be a very loss to healthcare system itself. So Raya has planned to outsource CT scan and MRI services to Live Life. They want to outsource that, which has world class international chain of diagnostic center. Live Life promised to provide radiologist report within 24 hours. They will give in 24 hours, it seems. However, finance manager of Raya doubt that it will not be profitable arrangement. For the satisfaction of Raya, Live Life have entered an agreement to provide its services to Raya with no guarantee of receiving payment. Raya agrees to following conditions. Cost saving generated in first year, the same will be retained by Live Life. Cost saving generating in second and third years will be shared between Raya and Live Life at the ratio of 70%. See what happened when they are outsourcing something, they the Live Life will pay some commission to them. But what Raya thought, If they themselves provide the CTs and MRI scans, it will be, they can earn lot of money. But if they outsource, whatever the money they are giving is not profitable to us. So they thought of this and they came into one agreement. What is the agreement? They will not receive for the for any guaranteed payment for referring the patient, but in the second year, but they have agreed for the following things. In the first year, they will not receive anything. Only Live Life will retain all the amount. In second year, Raya will receive 30% and Live Life will receive 70%. And the third year, next cost saving generated in fourth year will be passed to Raya, completely to Raya. Any cost saving generated by idea proposed exclusively by Raya that does not require capital investment by Live Life will be immediately passed on to the Raya. So whatever Raya is getting now, 30% in the second year and third years, and the fourth year completely to Raya only, and in the third year and any other thing that is completely the idea of Raya will receive the payment by Raya only. Receive payment to Raya only. So they are what they are asking, discuss the agreement between the Raya and Live Life. So they are not receiving any percentage of income for the patient referred. So it is a benefit over a period of time if Live Life earns more, if Live Life benefits more. So this is called as gain sharing arrangement. So you should write everything about the gain sharing arrangement, because it is a bit risky to Raya Healthcare Center, but it might be beneficial if it works out. Okay, what are the pros and cons in this? You have to discuss over here. So that's all about the topic. I will discuss all other questions in the next video, like test your knowledge questions, case study questions, case study digestive questions, all that I'll discuss in the next video only. And thank you.